Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Holy cow, has Upstart stock been on an absolute tear this year? As of this recording, it's up 346.5%. That's right, it's up almost 4x in 7.5 months. If you're watching this video, you're probably trying to figure out, is Upstart a stock to buy right now? Maybe even you're thinking about shorting it because it's up so much. You're trying to figure out what to do. I'm Jason Hall. This is The Smattering. And I've got my good friend Jeff Santoro on here with me. We're going to talk about what's going on with Upstart right now. How's it going, Jeff?
It's good. I've owned Upstart for a long time. It's been red in my portfolio for a long time, and now it's green. So I want to try to figure out why and what I should think about it too.
Yeah, that's really important context, right? Because we're just talking about what it's done so far in 2023. If you really stretch the chart out, and I'm looking at the numbers right here, since the IPO, it is up about double. But if you look at the all-time high, it's still down 85% from that hyper exuberant peak. So that's really good context. Jeff, before we get into the conversation, I want to remind the folks watching that we have a great partner that sponsors our videos. It's The Motley Fool. If you're looking for even more great stock ideas than you're going to find in this video, go to our special link, fool.com/the smattering. You see it right above mine and Jeff's heads right now. Again, fool.com/the smattering. Go to that link, and the Fool is going to give you its 10 best stocks to buy right now. So be sure to check that out. So Jeff, let's talk for a minute about Upstart. Primarily, it's a technology platform that's looking to make lending more accessible to more people that might be kind of on the outside looking in of the FICO credit regime that's out there that kind of runs the credit world. And the company says that based on its data, there's a ton of people out there that are perfectly credit worthy, even though maybe they don't have the FICO score to show it. And the accuracy of their data is better, is what they say. So the platform exists to allow lenders to originate loans and to run them through the AI-driven model that Upstart has. And then either they take those loans, they originate them at their bank or credit union, or Upstart may originate those loans themselves, and then they package them together and sell them to investors that want to own those loans to benefit from the interest. That's kind of the core business. And right now, the vast majority of their business is unsecured consumer debt, right? So it's the higher risk stuff. It's a higher interest, so you can make more money on it, but there's not an asset that can be repossessed like an auto loan, which they're starting to get into, or a mortgage, right? You don't have those big assets that you can repossess to cover a loan if the customer defaults on it. So what's going on with Upstart right now?
What I've noticed, because I'm a shareholder and I get the email updates whenever they have a press release, it seems like every couple of weeks, there's another announcement of a partnership with this credit union or a partnership with this bank. I think that's a really important thing to keep an eye on because they're going to need these partnerships for the business to really scale and take off. I know there's also been some upgrades. I'm trying to wrap my head around exactly what these partnerships mean. You can read the press release, you can see what they say about it, but I have some questions about what's not said. There's some details that I think are not clear in terms of the exact relationship they're building with these financial institutions.
This really gets to the core of it. If Upstart chooses to originate it, it needs to have a buyer because they don't want to hold a lot of loans on their books. They'll own some just as the way their liquidity works out from quarter to quarter before they have a buyer lined up. When they went public, they had a couple dozen or so partners that were buying those loans or were taking them when they originated them. And I think at the beginning of last year, 2022, they had around 50. By the end of the year, they had almost 100, and now they're well over 100. So they keep adding partners, and that is critical because you need to have a buyer or an owner of these loans if you're Upstart, because that's what's going to drive the transactional flow, because they're going to make their money off of fees for originating these loans is how they're going to make money, not really on interest income for owning them. Banks need to own these loans. Credit unions, lenders that holding loans is their core business, right? So here's what we've seen really since like late May. We've seen a handful of credit unions that Upstart has announced these expanded partnerships with. And I'm going to try to do a quick screen share of one because they basically all read the same. So this one's Texas Bay Credit Union. And a lot of these were already Upstart referral network lending partners, right? Sometime last year, a lot of them joined up. And what that means is they have a deal with Upstart where somebody will go on Upstart's website, they'll apply for a consumer loan, and they transition them over to that credit union, in this case, Texas Bay. So the way it works is as long as that potential borrower meets certain standards that are agreed upon between that lender and Upstart, then they can transition them over to that credit union. So that's good because it becomes really seamless for the borrower. They immediately roll over to who the lender is going to be. They can go through the application process to become a member of a credit union or open the account at the bank. And then the loan gets funded and it's all done. So it's really seamless. Here's what we don't know, Jeff. And I think this is the most important part that investors that are looking at Upstart, that are speculating on its future, need to be very cognizant of. What we don't know is, what are these partners agreeing to take in terms of loans? I'm going to offer a recent example from another business. PayPal recently announced a deal with one of the large alternative asset managers who is buying their entire book of consumer loans in Europe. They're buying the whole thing. And they've agreed over a period of the next several years to buy up to a certain amount of billions of dollars of more consumer loans that PayPal originates on its platform. So it's clear in writing what the financial benefit is for PayPal in that case, as the loan originator. And then there's somebody that's going to take those off of its books. And obviously Upstart's aiming for the same thing. But what we don't know with this 50 plus partners they've added over the past year and a half, the 80 or 90 that they've added over the past 2 or 3 years, we don't know what they're agreeing to take in terms of loan values, how long those agreements are in place. So I think investors really need to kind of temper their expectations about that. That's really important, because you remember Upstart doubled its partner account last year and loan volume absolutely cratered, right? It had a lot of those partners that joined and then paused and said, okay, we're still a partner. We're not going to do any business right now. So until we learn more about these agreements in terms of the volumes that these banks are going to take, I think investors still need to be really cautious and mindful until we start seeing the results really start to come in from those partnerships.